So here's the reality. The best guys in the world only do 20%, okay, which is going to be worthless to you. It's worthless. Even if you have 100 grand, I mean, 20 grand a year is nice, but if 100 grand's all you have saved, I mean, you're not going to put all of that, right? First of all, you're not going to be able to get into a hedge fund. Second of all, you know, you're not going to put literally all your savings into your investments because now you're one step away from being homeless if there's some type of problem with your income. Okay. Like it's more likely you would, if you had 100,000, you'd take 10,000, you know, and get 20% on that, get 2 G's a year, which is worthless in terms of getting rich. Okay. And even getting to 100,000, you know, saved is not going to come from investments. Okay. Investments are for making wealthy people wealthier for the most part. Okay. For people that aren't already wealthy, all right, you should be going in on getting wealthy, which means high margin business. Okay. High margin businesses are not available once they go public. All that big money's been made. Okay. And the bigger money's going to be made when they sell shares to you. That's how they really get rich. But for you as the buyer at the end game of that transaction, you know, you're lucky to get 8% from that particular company, which is not going to make you rich whatsoever. Okay. Same thing with bonds and GICs, real estate, all these different instruments. Okay. Because you, first of all, won't average 20%. You know, you're not Warren Buffett. Second of all, you're not going to get rich as a small investor. You don't have access to billions of dollars. You don't have leverage. You don't have access to other investors to give you money. You don't have access to debt. The best you can get is a tiny bit of leverage from your broker, which you don't even want because you don't want debt. Okay, you'll get a lot more leverage on a property than you would on a stock. Okay, and that should tell you something about how much the banks trust the stock market. All right, banks won't even give you good leverage on their own stock. Okay, you could be banking with Citibank, and they probably won't even give you leverage to buy Citibank shares. That's how much they trust the stock market, you know. But they'll let you buy a house for 10% down. Okay, and that's not going to get you rich either. But what I'm saying is that's how they feel about it, and that should tell you something, right? So at most you're going to get a tiny bit of leverage from a broker, and you don't want to go into debt, and you don't want to gamble on the stock market with that. Okay, you want nothing to do with that. And then, you know, you got to understand most of these financial guys are no better. You know, on YouTube or whatever, these guys are all and CNBC, they're all talking heads. Okay, they're useless at best and counterproductive at worst. They talk with certainty about what happened and what will happen as if they actually live off the market bets that they make as opposed to the views that they get as an entertainer. I haven't looked at the market in years and nothing happened except for my income continuing to go up because I'm actually focusing on things that increase my income. Okay, these guys are entertainers. The problems with many finance guys on YouTube throwing ideas around are we don't know how much they invest, we don't know their ROI. The knowledge is rarely reproducible, and it's not a fit for somebody who's not already wealthy. Okay. The vast majority of these guys, we don't know their assets under management, the consistency of their predictions, right? That information is not publicly available, you know, unless you're like a hedge fund where it's forced, you know, you're forced to declare these things. Okay, so you don't know who you're getting your advice from. Second of all, it's like that guy's job is to make money by selling that advice. Okay, so his intentions are not 100% aligned with yours. Whereas your job is you're trying to get wealthy. Okay, and that's a completely different game. Investments are what you do when you're already starting to get wealthy. Because otherwise, think about this for a second. Let's say you have a business like I do that's like 1,000%, thousands of percent, you know, return on what you put into it, or you know, crazy 60, 70, 80% margins or whatever. Why would you put money anywhere else, right? Why would you put money anywhere else when you have this massive asset? If you look at every single one of these guys, Warren Buffett got wealthy off Berkshire. Bill Gates off Microsoft. Steve Jobs off Apple. Okay, every single one of these guys has a company. They went all in on it, right? Because they're seeing incredible, insane returns. They're not going to go gamble on the stock market hoping for 8%, throwing it into companies that they have no idea about. That, you know, we couldn't tell you who the CEO is, right? Never seen the factory floor, and all those high margins have already been squeezed out by the time the company's got to that size. Okay, you know, so you know, you've got these talking heads talking about where Bitcoin's going to be 20 years from now that on YouTube. They're no better than Jim Cramer. We don't know their assets under management. We don't know their net worth. We don't know their prediction rates, and the advice is not applicable and is not useful and is counterproductive for somebody who's trying to get rich. You shouldn't be thinking about investments at all, at all. Couple exceptions, you know. My buddy Jason from Dividend Mantra has a good site. You know, he accumulated a decent nest egg, you know, over 300,000. He lives off dividends. He moved to Thailand to arbitrage his income, and he's able to live off a dividend check every month. His portfolio has been continuing to increase. He shows all the stocks that he has in his portfolio, and so that plan has worked well for him. You know, he's comfortable at that income level, and he's very transparent about it. That is the much more of the exception to the rule. It's also kind of like a different strategy, as opposed to you know, the get rich off your business deal. But that's much more the exception to the rule. Okay, a couple other guys that I like MJ DeMarco. He's telling you the same thing: get wealthy off your business. Does it in a slightly different way than I would say, but I don't agree 100% with anyone. And then build an income tree from stuff like corporate bonds and live off the interest. Or Grant Cardone, again, telling you to get rich from sales. You know, if you do things like him going into a service business and then he's putting it into a real estate fund. Again, I would do things a bit differently than both of those guys, but they're telling you the same thing: learn sales, get rich off your business. Okay. And that's the reality, okay. And the other guys you don't want to listen to are these frugal, like, save $4 a day guys. They're just perpetuating a poverty mindset, dude. If that's Starbucks, if not drinking that Starbucks is like a make or break difference for you by the time you're in your 50s and 60s, man, it's going to be a problem. Okay, here's the reality: like, capitalism is a terrible system. It's the least worst system, you know, if we compare it to the other two options we had over the last 100 years. Okay, but to make it work for you, you have to be aiming for the top 1%. Okay, which is like 100 grand, you know, over 6 figures, right? First of all, everyone in America, most people in America are top 1% of the world, but, you know, top 1% in North America is like over 6 figures, because you're dealing with taxes, you're dealing with inflation, you're dealing with people who are willing to, like, leverage their whole lives and accumulate a bunch of debt for a house. So housing prices are way more expensive than they would be if everyone was financially literate. So to be able to survive and thrive in this society that we have, and by the way, I'm grateful that I was born into a capitalist society as opposed to, you know, communism or a fascist society, because I've had a shot to be able to get to that level and get that financial freedom. Okay, and you should be grateful as well. But what I'm saying is, like, it's not a whole lot of fun at the bottom as a McDonald's worker, and it's not all the fun as you move up a little bit as an office worker. Okay, to be able to get the freedom and the fun and all the stuff, you know, the kind of lifestyle that you want, you have to get wealthy, and that has to be a major goal. Health, wealth, relationships, lifestyle. So, like, under your health goals is the wealth goal. You know, without it, you're on the streets. Or, you know, step up is McDonald's. Step up is like 45 grand, 50 grand office job where the government's taking 30% of that check. You know, you're dependent on them. Hopefully, Social Security and all that stuff will exist when you retire, but we don't know. So it's rough out there. Like, and the, you know, understanding, like, money's a major problem to be solved, and putting a ton of effort into it, instead of, like, getting smacked, you know, every week for the next 10 years before you say, okay, I'm really going to devote time to getting this fucking thing solved.